Welcome, crypto enthusiasts, to a deep dive into the fascinating world of FOMO in crypto trading. In this video, we'll unravel the concept of FOMO, fear of missing out, explore its impact on crypto markets, and provide insights to help you navigate this common phenomenon in the finance realm. Let's kick off our exploration by demystifying FOMO. FOMO, or fear of missing out, is a powerful emotional driver that influences decision-making, particularly in the context of crypto trading. It's that anxious feeling that others are profiting, and you might be left behind if you don't act quickly. FOMO taps into basic human psychology. The fear of missing out on potential gains can lead individuals to make impulsive decisions based on emotional reactions rather than rational analysis. FOMO often intensifies during periods of rapid market momentum. As prices surge, the fear of missing out on the next big opportunity can drive traders to jump into the market without a well-thought-out strategy. Social media, forums, and real-time market updates contribute to the spread of FOMO. Seeing others' success stories and quick gains can amplify the fear and prompt rapid decision-making. Now, let's delve into how FOMO manifests specifically in the crypto trading space. Crypto tokens often experience hype cycles, where FOMO peaks as news, social media, or market trends create a sense of urgency to buy. Traders fear missing out on the next big rally. FOMO is particularly pronounced during rapid price surges. Traders, driven by the fear of missing out on potential profits, may enter the market at inflated prices, contributing to short-term volatility. ICOs are notorious breeding grounds for FOMO. The fear of missing out on a groundbreaking project can lead investors to participate without thorough research, leading to both successes and disappointments. Understanding FOMO is crucial, but how do you navigate the emotional turmoil it can bring to your trading decisions? Set clear trading strategies and investment goals. Having predefined entry and exit points can help mitigate the impact of FOMO-driven decisions. Implement robust risk management practices. Determine the amount you're willing to risk on a trade, and stick to it, even if FOMO tempts you to deviate. Practice patience. Markets will always present opportunities. Avoid succumbing to the pressure of instant gains driven by FOMO. Let's explore real-life examples of FOMO in crypto trading and the lessons we can glean from them. The surge in Bitcoin prices in 2017 led to widespread FOMO. Many entered the market near its peak, only to witness a subsequent correction. The lesson: don't chase rallies without a solid strategy. FOMO often surrounds altcoins with sudden price spikes. Traders may rush in without understanding the fundamentals, resulting in unpredictable outcomes. The lesson: conduct thorough research before diving into new opportunities. Now that we've dissected FOMO, let's explore strategies to overcome its influence and trade with confidence. Knowledge is power. Educate yourself about the crypto projects you're interested in, their technology, and their potential. Research helps counter FOMO with informed decision-making. Adopt a long-term perspective. Crypto markets are known for their volatility, but focusing on the long-term potential of your investments can help mitigate the impact of short-term FOMO-driven fluctuations. Engage with the crypto community. Discussing market trends, projects, and strategies with peers can provide valuable insights and help alleviate the sense of missing out. In conclusion, understanding FOMO in crypto trading is essential for anyone navigating the dynamic world of digital assets. By recognizing the psychological triggers, learning from historical examples, and implementing strategies to overcome FOMO, you can trade with a clearer mind and make informed decisions. Join us on this crypto journey where we unravel the mysteries of FOMO, equip ourselves with strategies for success, and build a community of traders who navigate the markets with confidence.